If you think high-yield ETFs always eat away at your capital, you're about to rethink that. Today, we're diving into 5 powerful high-yield ETFs offering strong income without erosion, backed by real yield data and market behavior. These funds currently yield between 14% and 29%, pay monthly or weekly, and have held up better than single-stock income ETFs. First on the list is QQQI, the NEOS Nasdaq 100 High Income ETF. As of June 2025, it carries a trailing 12-month distribution rate of approximately 14.25%, with monthly payments averaging about 63 cents per share. With holdings across around 100 megatech companies, QQQI delivers Nasdaq exposure and yield, and its NAV hasn't collapsed, even while offering predictable distributions. It remains a favorite for investors wanting Nasdaq income without decay. Next is BTCI, the NEOS Bitcoin High Income ETF. This fund generates income through covered calls tied to Bitcoin exposure via Bitcoin ETFs. As of mid-July 2025, its trailing yield stands at roughly 22.28%, paying around $13.97 annually per share on the approximately $62.72 share price. Investors get monthly income of over $1 per share without owning Bitcoin directly, and volatility has been manageable compared to single-stock crypto-linked ETFs. Then we have MAGY, Roundhill's Magnificent 7 Covered Call ETF, focused on mega-cap tech names. Its trailing 12-month yield is about 7.4%, paid weekly. While lower than others in this list, MAGY delivers yield with greater NAV stability, since it writes calls across a diversified set of high-quality index names. Reddit and Total Return users often cite it as a more durable tech income play. BITY amplifies Bitcoin 2% monthly option income ETF, targets approximately 24% spread options premium, but as of June-July 2025, reports a trailing dividend yield of roughly 22.72%. Distributions typically run $1.13 per month per share on a price of about $60. BITY excels in harvesting Bitcoin volatility for income, but remains structured to minimize capital drawdown versus pure crypto holdings. Finally, BAGY amplifies Bitcoin Max Income Covered Call ETF, offers eye-watering yields. Its trailing dividend yield is about 28.59%, with annual payouts of around $16.96 per share for a price point of around $60. BAGY uses weekly covered calls to deliver massive income, but so far reported NAV drop hasn't mirrored that payout, making it a standout among high-yield funds. So here's what sets these ETFs apart. QQQI offers tech exposure plus yield, 14%, with less drawdown. BTCI and BITY deliver Bitcoin volatility income, 22 to 23%, while avoiding crypto exposure risk. BAGY pushes income up to approximately 29%, while still maintaining relative NAV stability so far. MAGY pays weekly approximately 7.4% with strong NAV durability, though yield is lower. These aren't reckless bets. They're experts calling volatility premium income, but within diversified frameworks. They avoid the NAV collapse patterns often seen in single-stock covered call ETFs. Let's walk through each one. QQQI is perfect if you want tech income that doesn't collapse when volatility softens. With sizable yield and durable NAV behavior, it's a staple in many income-focused portfolios. Its monthly income and relatively modest price swings make it a reliable choice. BTCI suits Bitcoin believers who want structured income and less exposure to crash risk. With approximately 22% yield and moderate drawdowns compared to buying BTC directly, it's a rare option income vehicle built around crypto without meltdown risk. MAGY anchors the group for tech lovers who prefer diversified income via covered calls. Yield is lower, approximately 7.4%, but since it's concentrated in mega-cap but multi-stock exposure, you get income with minimal volatility relative to risk. BITY is big on income. right at approximately 22.7% yield, and it pays monthly. It's well suited for investors chasing premium income from Bitcoin-driven premiums, while giving some downside control. BAGY goes bold, targeting approximately 29% yield via weekly calls. That's serious income, but the early data shows decent NAV behavior, making it surprisingly resilient even with such heavy payouts. Now let's run a hypothetical allocation. Assume you invest $100,000 equally across these ETFs, $20,000 in each. QQQI, $20,000 times 14.25% equals approximately $2,850 annual income. BTCI, $20,000 times 22.28% equals approximately $4,456. MAGY, $20,000 times 7.4% equals approximately $1,480. BITY, $20,000 times 22.7% equals approximately $4,540. BAGY, $20,000 times 28.6% equals $5,720. Altogether, that adds up to $19,046 annual income. That's nearly 19% yield on your $100,000 diversified and avoid sinking your capital. Compare that to a typical single-stock covered call ETF paying 70 to 90% yield that often blows up 30 to 40% in NAV within months. That total return math can fail badly. These five outperform in risk-adjusted yield. You get big payouts without the historical downside we've seen in funds like MSTY. Who should use which? QQQI, tech income without sacrificing capital. BTCI, BITY, BAGY, crypto volatility income, but with option discipline. MAGY, ideal for tech investors wanting weekly income plus low volatility, if you're an income investor aiming for yield. But cautious about price erosion. These are your best options right now. They pay consistently and hold capital better than single-stock covered call plays. Just remember, none are risk-free. They rely on option premiums tied to volatility. If volatility dries up, payouts could shrink. If crypto collapses, BTCI, BITY, BAGY may drop fast. Always monitor NAV and balance your allocation. But if you're looking for high yield without decay, start with QQQI, BTCI, MAGY, BITI, BAGY. They offer income and capital durability. If you found value in this breakdown, hit that like button, subscribe to Money Stick Unfiltered, and ring the bell for more ETF deep dives. We decode income strategies so you don't have to.